You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your business, your family can benefit from current events. Most of all, thank you for joining me. Before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender, Jay Kaplan's in the house. Welcome.
Hello, thank you.
Glad to have you with us, and let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly at 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
Wow, those guys are pretty loud this morning, aren't they? Well, I do have a great team when it comes to developing a financing plan. A plan to save you money. I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. Now, we have to be very. If I had my what was that cartoon, Jay? Very, very careful. I think is the way they put that one. Yeah. I forgot who the cartoon was, but
Warner Brothers. I remember.
Yeah, it was a Warner. Was it the pig?
Yeah. Well, there's Porky Pig.
Porky Pig. That's what
I
it
hate
was.
to bring that up if there's video here.
Yeah. Oh, so you've seen me? Okay, I get it, Jay. Okay, yeah. Today is National Bikini Day today.
What are we doing in here?
Jay, no one wants to see either one of us in a bikini. I'm just saying, Jay, that could make the strongest of people ill. Either way, and I'll speak for both of us on that one, Jay.
Yeah, left your Speedos at home?
Yeah, exactly. Well, we did see some streakers yesterday. Yeah. Anaheim Hills Parade. They had some streakers going through the parade. I think about 5 or 6 guys going through there. So they were wearing their Speedos, Jay. So it's okay. National Apple Turnover Day today. Graham Cracker Day. Graham crackers. The only way you can do a graham cracker is if you mix it with chocolate and marshmallows. I'm just saying. Best we better stop thinking about this long weekend. Markets, Dow Jones Industrial Average down 22 points. Oil is down $1.80 a barrel right now, down $1.80 a barrel. Do you think that has any effect on our gas prices in Taxifornia? We'll check it out. The national average of a tank of gas, $2.23.1. In Taxifornia, $2.93.50. $2.93.50. Think about that. If you need gas, though, you can just go to South Carolina. It's $1.90.2. Over $1 a gallon cheaper in South Carolina than it is here in Taxifornia. Well, we'll keep on doing what we do, see if we can continue to bankrupt our state even more. Well, I guess you can't bankrupt a state because it's illegal. Just insolvent is the terminology. U.S. 10-year Treasury, 2.336, down about, just not enough to talk about. So we're moving right along. The 10-year Treasury, obviously we watch the 10-year Treasury because that is the predecessor, so to speak, or a good guide to what's going to happen in mortgage-backed securities. So that's the reason we watch that one. Speaking of watching, it is very fascinating to a commentator like me, watching what's going on in the state of Illinois. Yeah, think about this one. They're finally talking. I guess the only solution that they can figure in Illinois to get their budget back working is to raise taxes. Well, you know what that's going to do, don't you?
You know better than that.
Well, we've raised our revenue or taxes here in Taxifornia by 60% under Jerry Brown, and we're still insolvent. So do you think maybe they ought to look at the other side of the ledger and see if the other side of the ledger might be able to help them? But I guess they probably will not do that because it might just make too much sense to take a look and see, maybe we could save some money on the other side. Maybe we need to. Now, I never say this terminology because this terminology does cause me some significant discomfort, but tighten the belt maybe. Might be an idea that they want to think about in Illinois. Obviously, in Taxifornia, that's never been on our radar here. They are seeing what's going on in those lines in New Jersey because they can't afford their lifestyle there either. And I do hear that our friends on the left are looking to change the name of our state. They figured that being that we are so efficient at what we do, so the idea of taxing everybody, give money to whomever we can find to give it to, take from whoever's leaving the state. Leaving the state. Interesting. We've got to...
So I know whose ass to kick.
Yeah, the idea is if they get tired of raising all these taxes, people start saying, well, we're just going to leave the state. Have you noticed that that's kind of what they're doing in Greece? Maybe we should just change the name of Taxifornia to Greece. We're trying to follow the same guidelines. Speaking of guidelines, did you see what's going on in Oregon? There has been a new observation, a new scientific observation in Oregon. Apparently, on driver's license, they've realized now that there's a third gender. So many of us who are old timers, I was taught in school, you've got males and you have female. But in Oregon, you got X. Now, I don't know what it means when you're an X. Do you know which restroom you use when you're an X? I'm just curious. You can't. That's Oregon. Another one of the interesting snowflakes. Moving right along. Chicago, they're back in the news. It's kind of funny. You look at these things and you say, for the last 8 years, the government was run by executive order. And now when they start getting rid of executive orders, you shouldn't be able to do that. So Chicago, they're saying that the President Trump should not be able to use executive orders to reverse or erase gun controls that former President Obama implemented via executive order. Now, if it's an executive order, can't any executive change it? Isn't that the way the rules work? Just a thought there. Maybe if they start following and using the legislature. Of course, we know what the legislature is like right now. We've got Chuck Schumer, who can't figure out how to do anything at all. So, although, we are watching right now, it's going to be very fascinating to me because I like President Trump's original thought on health care. I think that we should leave health care exactly as it is today, following exactly what the Democrats and President Obama wanted. Now, the problem there is, we don't want to talk about this one either. 28 million people are going to lose health care coverage if we do absolutely nothing. Now, we lose 22 million are going to be liberated under the Senate's plan. They're not going to have to buy health care insurance if they don't want it, where now they have to buy it. But 28 million who may want health care, they're going to lose it. Think about that concept. So we will continue watching to see what's happening there. And talking about watching and following from one administration to another, the news is out. So here's the concept. The Obama administration had 476 people working on the Obama staff 2015 at a cost of $40.9 million a year. I guess my boys are asleep again. This year, the Trump White House is employing 377 at $35.8 million. Wow, that looks like a savings of about $5 million a year. Think about that concept. I think my boys just came back. Maybe they didn't come back. I wonder what happened to my guys here today. Oh, there they are. They must have still been falling off their chairs. $5 million savings this year. Think about that concept. That's kind of nice to see a little bit of savings because you know where that money comes from? Yeah. You and me, we get to, they take our money to spend it for their people. I know there's a lot of stuff that has to be done, and there's a lot of staffers. I like the idea of saving $5 million. There might be some people that disagree with that. Moving right along. Where are we going? Let's see with this. Gotta love this one. Missouri Secretary of State Jay Ashcroft defended working with the President's Commission on voter fraud. Now, we figured out how to get a identification to buy Sudafed. Think about that concept. We can figure out how to show our ID to buy Sudafed. We can show our ID to buy cigarettes. We can show an ID to buy alcohol. Yet, we can't show an ID to vote. I'm just curious, states like California and New York that don't want to participate in this study. Now, they don't mind spending money to see what the effects are of parties with college fraternities. They spend $5 million for that. That's okay. That's National Endowment of the Arts. They will spend $1 million to figure out the effects of shrimp on a treadmill. But to figure out voter fraud, we don't want to spend any money on that. At least we did find one thing that California does not want to spend money on. It might be the first thing ever that California did not want to spend money on.
You're absolutely useless.
We'll continue watching and seeing if we can find a second item that California will say no to. We'll just keep that up. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, don't think that just because Robert Mott left us that we do not have Wine Wednesday. Yeah, Robert's got his other business going, and we're going to miss him deeply, but it is Wine Wednesday. We will continue to drink wine on Wednesday. We will also chat. Jay Kaplan's here to talk to us about the reverse mortgage loan. Your opportunity to achieve the American dream keeps getting better. Best and worst home insurance companies and lenders have a note out to students. We want our money back. Just think about it. That's the note. Remember, you can reach us anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter, at Ron Siegel. And if you miss any part of our broadcast, shame on you. But the replay is available, Ron Siegel 1, Ron Siegel the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
What if your family business could help clothe a less fortunate family? Or your restaurant could feed truly hungry people? What if you could help to comfort the lonely? Plant sustainable resources where nothing has ever grown before? Or make a child's lifelong wish come true? What if all you had to do was simply do nothing more than what your business already does every day? Would you do it? Introducing Processing for a Cause, a unique program that turns a percentage of your business's credit card volume into ongoing donation dollars for nonprofit organizations and foundations. Simply switch your credit card processing provider to Processing for a Cause and begin supporting a worthy cause today. The process is simple, and the cause will change lives forever. Processing for a Cause.
Are you a
Veteran, own a home and need money? The Siegel lending team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel lending team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. In the real-time real estate segment today, being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Text NEST, N-E-S-T, 79564. Find your dream home before someone else does. And it could be your retirement dream. It could be your move-up home, right-size home, any of those. Any of the above will work. And in keeping with the theme of the week, July 4th, Independence Day, your opportunity to achieve the American dream keeps getting better. Forbes.com recently released the latest results of their American Dream Index, in which they measure the prosperity of the middle class and examine which states best support the American dream. The monthly index measures several different economic factors, including goods producing employment, personal and commercial bankruptcies, building permits, startup activity, unemployment insurance claims, labor force participation, and layoffs. The national index score was rounded out to 100 in January as a baseline for comparison, and it rose for the fourth straight month in a row to 101.8. Alaska, coming in at 89.4, represented the worst score on the index, due in part to the recent collapse in oil prices. In contrast, Wyoming came in with the highest score, 115.1. I'm going to post a map of all of the different states and what their scores are. Taxofornia, 101. Yeah, it wasn't in the top portion of the states, but you know, we've got our issues. Maybe I won't go there. Forbes senior editor Kurt Baden, explained why many states saw a boost in the index last month. I can't pronounce Kurt's last name, but here's his quote. The American Dream Index rose for the fourth straight month to 101.8, propelled by gains in goods-producing jobs and building permits, as well as declines in unemployment claims and mass layoffs. Goods-producing jobs, manufacturing, mining, construction, and agriculture were up for the 9th straight month in May. Building permits rose for the 4th straight month compared to the prior year. The bottom line, the American dream for many includes being able to own a home of one's own. With the economy improving in many areas of the country, that dream can finally become reality. That is some good news. Love that idea, because we do know that the American dream, no matter what age, people want to own their own home. They just don't know whether they can or can't. Give me a call at 800-306-1990. I suggest that Either you can own your own home now, or we can put you on a game plan to home ownership, one or the other. It's just a matter of planning for you. That is the Real-Time Real Estate segment. Again, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. Red wine means it is time for our weekly Wine Wednesday chat, and being that our guru is not with us, you're going to have to just listen to a couple of people chat about wine who just drink it. What the heck? I mean, it's... Jay, we could qualify for this one now, right?
Well, drink? Did you say the word drink?
Yeah, Jay's got his cup over here. You might see Jay while we're watching on RonSiegelRadio.tv drinking, and we never ask Jay what's in the cup. We've learned that could pose a problem, although we do know that after the broadcast he does drive, so I'm sure he's responsible. But there might be, Jay, I mean, you and I do a little study here. There is a study that finds red wine compound slows aging in muscles and neurons. I don't know about you, Jay. I've read some of the research on resveratrol.
Yeah, there you go. I knew, yeah.
And well, Chris Bissonette was in with us last week. I don't know about Chris though, because he takes a resveratrol pill. And I just figure, I don't know about you, a little wine would do it for me.
Probably has a little more benefits.
And I don't know, again, Jay, I'm not going to speak for you. I'm going to throw this at you. I go on this theory that most of the studies I've seen say that one glass of red wine is very good for you, one glass a day. And
one glass of tequila a day is what you said?
No, the study red here tequila, from Virginia Tech shows red wine, but you know, it's supposedly has some heart health and reduce the risk of Alzheimer's disease. So here's my thought: Alzheimer's, cancer. Obviously, it does not work on obesity because it says it in there, and I'm living proof that it does not work on obesity.
It could work on you caring about it.
There you go. Okay, yeah. Now we got that.
Yeah.
But you know, my philosophy on this, Jay, is that I keep saying this all the time, and I can't get the doctors to do the study for me, that they say one glass of red wine a day is very good for you.
Now you said it was good for aging,
right?
I mean, not
aging. Maybe you're drinking too much tequila, James.
What about neurons, though? Do you want those to slow? I'm not sure.
I don't know about that, but I always figured that if one glass of red wine is good for you, two must be better.
And three. And
yeah. Exactly. Moving right down the list there. We better, this science stuff, though, is taxing on I guess I can't say it's Monday morning, although it feels like a Monday morning,
right?
It is
Monday morning.
And I can't even say that it's Taco Tuesday, but wine and tacos, I guess there are some good putting those two together.
Yeah, oh yeah.
And I know you're the tequila guy, but...
Well, I say Santa Rosa. No, not Santa Rosa, which I was at a couple of weeks ago, but Pasarolas.
Right.
Or El Paso de la Rosas is, I guess, the real name of it. I found out.
Okay.
There is a really good Mexican restaurant there that serves nothing but, well, I shouldn't say nothing. They're specialized in tequila.
Very interesting.
So they have one tequila.
They're in Paso Robles and they don't have wine?
Oh, I'm sure they have wine too, but I mean, there are dozens of restaurants and places for wine. So why not open one for tequila or an alternative?
Okay.
It doesn't mean one or the other, you understand. They are mutually...
Oh, you got to drink both.
Yeah, of course.
Double fister. Okay. So talk about Riesling with the tacos, both fish and meat tacos. I don't know about that. Red and rosé. You don't need to just stick with the whites. Light rosé, light red, low in tannins, really well with the tacos as well. I don't know about this one. We'll have to leave that one and talk to the gurus about that. But, Jay, you and I can talk about this one for sure. America's best wine destinations for 2017. So we've got, if you're on a budget or short on vacation days, good news is you don't have to head all the way to France or Italy. to visit wine country. There are premier wine destinations right here in Taxifornia for the wine lovers who want to enjoy a refreshing glass Chardonnay or Syrah. So let's look at some of these key findings. California, most of the counties that rank in the top 10 of places are located in California, in the Golden State, but since California is home to famous wineries in places like Napa Valley, Sonoma County, no surprise there. So here's where what they've got is some of the top wine places. I don't know how many you've been to, Jay. Yamhill County, Oregon.
Yes, I've not been there.
I've not been there either. King County, Washington.
Same answer.
Napa County, California. I've been to that one.
Yeah.
300 different wineries, one every 2.2 square miles.
Don't forget the wine train.
There we go. Chardonnay and Cabernet Sauvignon are the most widely grown grape varieties in the area. San Luis Obispo has more than 100 wineries.
Oh, yeah, that's great.
And that's nice and close for us here in Southern California. Third highest number of wineries in the study. One place that every traveler might want to visit is Tablas Creek Vineyard. I've been there. It's a good one.
San Luis Obispo has Boo Boo Records, too, if you're into vinyl.
Boo Boo Records. Right. Sonoma County, just north of San Francisco. Been to that one. One winery every 6 square miles.
And the city of Sonoma, the square is really beautiful. It's
absolutely.
It's just very crowded right now. I would really suggest if you take these trips, take them off season, because this I've been to not because of wine, although wine is always good to have. I think that's a bonus. But to sign up clients, I've been in the what do we just say?
Paso Robles?
Paso Robles. Thank you.
Yeah.
That's why he's younger than me. Paso
I've had more red wine.
Yeah, Paso Robles. It's the third time this year on business. I've been there, and
me
the
too.
Other 2 times were absolutely wonderful. This time was great, but it was packed.
I go there for wine business, Jay. So we got to go over there for business. Of course we do. It's called market research, Jay.
Oh, okay. Well, I have to add that to my.
Put it on your expense log.
I was just going to talk about that, but I don't want to get into taxes right now.
Absolutely.
Anyway.
Okay, well, we'll hold that one for later, and we're going to talk to Jay about his other passion in life, helping seniors with their reverse mortgage loans. So we'll talk to Jay when we come back about that. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. We're going to also talk about the best and worst home insurance companies, and lenders are telling students, hey, they want their money back at some point in time. Remember, you can reach us anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1, Ron Siegel the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel lending team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel lending team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel lending team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal Housing Lender.
Do you own real estate or have assets over $150,000? Do you know one of your heirs will be the probate courts and the IRS? If you don't have a living trust, you will go through probate. Call Heritage Financial Services toll free at 1-855-434-7400 for a free review. Check us out on Facebook, Heritage Financial Service in Lake Forest, California. That's 1-855-434-7400. Again, 1-855-434-7400.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. In the Your Credit Matters segment today, being brought to you by Gold Star Mortgage. When you're ready for that next mortgage, any mortgage, Gold Star has the programs and the products for you. And they call them products. It's kind of interesting how in the lending industry they refer to the different loan types as products. VA, FHA, USDA, home equity conversion. You've got all the different programs. They call them products. Just what's right for you. That's all that really matters. At the end of the day, what is it that's right for you is the important part of the subject. And let's chat a little bit about what some of the best and worst home insurance companies are. Let's think about that one for a minute. Which are the, and how do you figure out, how do you identify, how are they identified? Now, you know the worst I have, I call it like it is, the one that I feel did my family wrong, so I won't even say it, I won't go there, but even though it is that old car company. But 2017 ranking of home insurance companies shows that just focusing on what you pay in premiums isn't necessarily the smartest idea. A 2017 update from Consumer Reports names the best and worst home insurers in the business. Keep in mind that the best does not necessarily mean the one with the most affordable premium. Highest ranked home insurers to come up with a rating for each insurer and overall rankings by best rating score. The Consumer Report used the following criteria: ease of reaching an agent to handle the claim. I don't like calling an 800 number. Agent courtesy, promptness of response and attentiveness in handling the claim, simplicity of the claims process, damage amount, satisfaction with the company's estimate of the dollar amount of damages, timely payment, satisfaction with timely payment by the insurer. In the top spot on the list, I should have my guys ready for this, but they might be a little slow this morning, but we're going to get to the top spot on the list will be Amica Insurance. Amica Insurance, never heard of them. Followed very closely by USAA, and if you qualify for USAA, I've never heard anybody say anything but great things about USAA. So if you qualify, that would mean that you've got to have somebody living in your family tree that has military background, military service. And then once they sign up for it, their offspring all the way down the line can continue to sign up for it as long as there's no lapse. Amica and USAA may not have the best premiums, but remember, homeowners insurance is only for use in a catastrophic situation, so it's crucial to have the best coverage Very, very important. Don't go with that $500 deductible. That's what our grandparents used. That's not the idea. On the flip side, lowest rated insurers in the country, Auto Club, State Auto, American Family, Allstate, tied just above them. Just a hair above these four, State Farm, Farmers, and Travelers. I don't know how Mercury can't not be in there. I shouldn't have said that. That is Your Credit Matters, brought to you by Gold Star Mortgage. When you're ready for that next mortgage, give me a call, 800-306-1990. Gold Star will be ready for you. But let's talk about our senior population, and that is where we bring our friend Jay Kaplan in. Not just because we're talking seniors, Jay, but...
You're right.
We still going to chat about... I heard an interesting commercial today about how much equity our seniors have in their homes. And the fact is, Jay, that the myths are all still out there. Right? I mean, so maybe today we'll... Because you and I haven't chatted, but we've talked about... Sometimes you and I get caught up in discussing things that are... maybe a little over, they're down the road. They're things that people need to know about the reverse mortgage loan.
Yes.
But they become down the road, the idea of how you can manage your taxes and how you can have an optional mortgage payment. But sometimes I think maybe we just miss some of the real basic items, such as some of the myths. So let's chat about some of these myths that are out there and see if we can help some folks. The lender owns the home.
No. Oops, no.
No, who owns the home?
No, you continue to own the home. Or whoever the homeowner is continues to own the home.
Okay, so it's no difference on this one then, is there?
No.
It's really basically just the idea that whoever the reverse mortgage loan is nothing more than a loan on the property.
No, it's just a loan. I mean, I'm not even sure where the word reverse came from, although that's not really what they are anymore. And unfortunately, I think
the idea that the reverse came from the idea that it's not the same as the traditional.
Yeah, but you talked about insurance earlier,
right?
And some of the worst ones that were on the list are the ones that do most of the advertising also. And the advertising for the TV advertising for reverse mortgage is not horrible, but they do seem to go after only people who are in trouble, and that's where a lot of those myths get continued.
Yeah, absolutely. And actually, you jumped to number 5 there, but we'll get to it.
Okay.
Home must be free and clear.
No. No, I mean it's a great it's the perfect property for every homeowner that's older.
Okay.
62. One of the two needs to be 62.
62 is pretty young nowadays.
Well, let's hope so, because I'm way over that. And
I mean, that's in your rear view mirror, huh, Jay?
Barely. Yes.
Okay, so the house does not have to be free and clear?
No, but it is good. It's like I said, it's for those that qualify who have not used their home like a credit card. So you need to have equity. About half of it needs to be equity. But, each individual situation's a bit different. So we'll look at them.
So you don't have to, it's not an issue where you have to be free and clear. Can you buy a house?
Absolutely. And as far as not being free and clear, it's like, to me, and I hate to use some of these words, some of these phrases, they get used too much, but it's like a no-brainer to switch to a, let's call it a reverse mortgage then, because you can still make exactly the same payment you made before. There's no prepay, but you get that line of credit that you would not otherwise have.
So you get extra options.
A lot of extra options.
Okay, we're going to talk about that if we have a little bit of time. Myth number 3. Well, I guess I give it away when I say it's myth number 3.
Right. Well, it is.
Once loan proceeds are received, you pay taxes on them. No,
that's your money anyway. It's your home. It's your equity. It is not considered income.
So, being that it's not income, and that the word that generally follows taxes or precedes taxes is income taxes.
Yeah.
So being that it's not income,
right.
it's not income taxable.
No, the only thing that it pertains to taxes is that, there is a tax write-off, and sometimes when you make payments. The interest portion is tax deductible, and that's why some people will every now and then, if they need to, according to their CPA or whatever, they can make some payments or a block of payments to get a tax write-off only if they need to. And if you've gone 30 years without making a tax payment and you pass on, then your heirs have the availability of using those 30 years worth of tax write-off for themselves.
Nice. Like that idea. Myth number 4, the borrower is restricted on how to use the funds.
Never. Never.
So I can go to Italy?
You can. I'm not, I mean...
Go to Hawaii?
If I were setting this up, I may have had a few restrictions. I think healthcare, I think you should put some of your own restrictions on it. You want to save some in that line of credit so that it grows continuously, and also your bank account, remember, is also growing because you're not making payments. If you're not making payments, you need to make sure you've got health care covered for you in the future and keep your heirs and children protected from having to pay for that one way or the other.
And we know that the beauty of our health system, our doctors and exploration, research and development, is that we're staying alive longer.
Yes.
And in some instances, we need some extra care. Somebody to come in and maybe help us down the stairs or get dressed or whatever the needs are. That has to be paid for somehow.
Absolutely, it has to be paid for either with it has to be paid for with money and or effort. And a lot of times when the cash is not available, the children have to either spend time or their own cash to do that. This protects them from that and allows the homeowner to keep the value of the home so that any equity still goes to the heirs later.
Absolutely. So the heirs are... Well, we'll talk about that in the next segment about equity and the heirs and the estate. Myth number 5, it's only for poor people.
Well, no, I think I touched on that a little bit earlier. Unfortunately, a lot of the lenders, and these are not bad lenders, I'm just saying I disagree with the way that they advertise. They're going for, here's another one of those phrases I dislike, low-hanging fruit.
Sure.
And the low-hanging fruit are obviously those that don't have to make an educated decision. They have to go with something. But I think every educated decision will bring you to the same point. You had said earlier, I even wrote it down.
All right.
I know I'm too old to remember. You said the American dream is getting better, and I added, and easier, at least for seniors with equity in their home.
And so we're going to talk more with Jay Kaplan about that when we come back, because how easy is it? We'll think about that one. And what's involved? Will you qualify for the reverse mortgage loan? Well, we'll talk to Jay about that as well. I bet he's got the answers for us, because you're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. We're going to also talk about a comment that's going to students from their student loan lenders. You're out of school? We want our money back. Reach us anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1, Ron Siegel, the numeral 1, on YouTube. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area-trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Isn't it time you found out the truth about FHA insured home equity conversion? No, it's not your grandfather's reverse mortgage. This just may be the finest financial planning strategy available for all homeowners of retirement age. Helping protect what you've earned is the job of your board of directors with continued education. Major research has shown that using a HECM will significantly enhance the success rate of a retiree's portfolio and legacy. Please allow us to educate. For your complimentary consultation, call Jay Kaplan at 949-300-3855. That's 949-300-3855.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRENMLS 217037 and 145502 and Cal BRE 0186945 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. In the Word on Wealth segment today, being brought to you by AskAboutReverseMortgages.com. Check out the website. There's a lot of really cool information there, AskAboutReverseMortgages.com. Am I saying that the reverse mortgage is right for everybody? No. There may be some people that it's not right for, but I would say one thing for certain. It is right for everybody to understand. There's never a bad, in my world, never bad to have some education. And what do lenders saying to students right now? I don't know how we got asked about reverse mortgage sponsoring our student segment, but the lender's comments, you're out and we want our money back. Can you imagine that they want their money back? The first year's crop of new college grads. Few things are more exhilarating than being handed your diploma. Too bad it's so closely followed by something else, and that is the first student loan bill. They follow pretty quickly, one right after the other. 7 in 10 seniors graduate with debt owing about $30,100 per borrower, according to the most recent data from Institute for College Access and Success. For 2017 graduates, including those who don't yet have a job, the repayment process is about to begin. Employed or not, starting out with such hefty debt load can be overwhelming. That's why I've said, well, President Bush, President Obama both teamed up to really slam the kids, to slam our youth. The whole problem goes away with one piece of legislation that says student loan debt is dischargeable in bankruptcy. Now, am I promoting the idea of bankruptcy? Absolutely not. But I am saying that the schools will start charging less money if their bankruptcy is an option. Because right now they give the kids a loan and they know they're getting the money back. There is no risk of that, so they'll just keep giving them more and more and more loans. Not a good idea. Now, if they realize that they have to figure out how they're going to get the money back, if they're going to get the money back, the schools will be a little bit more prudent in the lending. That's just one person's opinion, but you need to know your loan. You need to update your contact information with the student loan company. You have to understand your cash flow. Can you afford it? Register for auto pay. That's my recommendation. And see if there's an employer when you're comparing employment opportunities. Well, you might see if the employer has some programs that assist in that. I believe that Ernst & Young, I guess they call themselves EY now, Fidelity, a couple others have some programs. Consider consolidating and refinancing. There are options there as well. That is the Word on Wealth segment, again, brought to you by AskAboutReverseMortgages.com. So in chatting this morning with Jay Kaplan, we are talking about home equity conversion mortgage, better known as the reverse mortgage loan. And I like to put that, and I put the emphasis intentionally on the word loan because it is no more than just a loan from somebody, Jay.
Correct.
Right? I mean, car loan, you have a lien on the car.
And if you get a car loan, the bank gives you money to spend on the car. When you buy a home, the purchase loan gives you money to give to the builder or the seller, and in a reverse mortgage, the bank gives you money to pay off your first trust deed and replace it, or gives you money as you need it in the future. So I'm not sure what's really reverse about all of that.
Just the thinking. Maybe it's, to me, I think the way I look at it, it's just the thinking of it, because originally, the thought process, I believe, on the loan way back when, was that it really initially was a program that was geared heavily for people that needed money and they couldn't afford their payments.
Yeah, initially these were private loans.
Right.
Really. I think the first one was in France. That's on record, and the woman lived to 103 or something.
Holy cow.
Yeah. But actually, so the thing is, each individual bank on the corner had their own, quote, reverse mortgage.
And their own rules and regulations and guidelines.
And that's why people bring up some horror stories that probably were very true, but all that is gone forever.
So, and what I'm really was getting at, the idea of the reverse, though, is it was the opposite of the forward loan. It was people that couldn't really afford their mortgages any longer. They needed some sort of financial planning, from the sense that they were from the debt side of their balance sheet. Nowadays, from the financial planning standpoint, I think we see this, or I get more calls about people talking about it from the asset side of their balance sheet.
Yeah, and now I think the big push is for and I have a little bit of trouble with this actually, the mass affluent. The mass affluent is supposed to equal middle class. Not sure how that all comes into place. Maybe the mass, that's most of them. But that should be the real target area. And there's nothing wrong with someone in trouble being helped out with this.
Sure.
Nothing at all.
Being able to keep their home. I mean, that's the idea.
Yeah, I pulled this out. William Sharp, I have a picture of him. He looks even older than me.
I didn't think anybody was.
Well, he probably isn't, but he looks it from here. Winner of Nobel Prize in Economic Sciences. It says, retirement income planning is the most complex problem I have analyzed in my career. And I think each individual person would share that same idea, that whatever they plan, you never know. Nobody has a real crystal ball, so they don't know.
Well, the irony is, Jay, and I used to work at Merrill Lynch and do some financial planning with people. I'm not a financial planner. I didn't have that license. I had all the other ones, or many of the other ones. But the concept was, when you start looking at retirement, we look at what our 401k or our pension plan is. Some don't even throw in Social Security, but some will do that. They look at their assets from the holding standpoint, but in many, many instances, until just recently, the financial planning community did not look at home equity as a spendable asset.
Right. They're starting to do that now. That's step one. realizing what the heck a reverse really is, that's step 2. And some of them are very well versed in it.
Sure.
And some, of course, are not. Just like any other industry.
Absolutely.
You can't, brush the whole industry at once. But
well, I think some of the software was where the problem was, is the software didn't say how much equity do you have in your property, and is that something that we can tap into if we're going to be living for 30 years?
Remember, tapping into it with a reverse mortgage doesn't mean you're borrowing money from yourself or the bank. It doesn't mean that. It's not making, in reality, it's not really making a big decision right now. It's allowing you to make decisions later on. If you don't owe anything now, you still don't need to owe more than $500 to get that line of credit. If you have a loan right now, just replace it. Make the same payments if you want. Your line of credit will continue to increase regardless of the value of the property. So you can keep paying it down, and as long as you keep about $500 in it, you can still have your $800 or $1 million plus line of credit available, and that line of credit could be more valuable than your home, but it's always available for any reason, like we discussed before. If you didn't get the reverse, you would not have had that. You won't have that, and that's so much more choice. And again, you can pay your home down. Just leave about $500 in it.
How do I know if I qualify?
Well, you have to be 62.
I guess I'm out.
And well, hopefully you will be there.
Someday I'll get there, I hope, Jay. Okay.
I wish I were. Anyway.
We said about 50% equity in our property.
Yeah, close enough. Yeah, close enough.
We can call you and find out exactly how much.
As far as credit is concerned, we do not use credit scores at all. You just have to show that you've made your house payment and other payments in the last 2 years pretty well. Again, doesn't have to be perfect. And you have to show that you have enough income to qualify to pay the taxes and insurance in the future. Certainly no house payment. So in almost every single case, only simple Social Security for even one of the two borrowers is usually enough. It's another one of those phrases. I'm getting all of them today. It's almost as easy as falling off a log. I had one person who couldn't qualify. She was 65 years old, and she had $247,000 worth of unpaid student loans. Now, just to tie back into what you had.
Holy cow, great information. That's not going to happen to most people, but let's talk to Jay Kaplan about that. If you have any questions on those programs, it's not that difficult. It's easy to talk to Jay anyway. And be sure to set your first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to John, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com.
Thank you.
And remember, make a lot of money, help a lot of people, have a lot of fun, have a great day. We'll talk to you next time on Ron Siegel Radio.